The NGX suffered its steepest single day loss of 2026 with about 3.64 trillion naira wiped off in hours as the market sharply corrected after the incredible run that we've seen this year so far. Inflation just ticked higher, and S&P is now racing Nigeria's 2026 inflation forecast to about 16.9%. The government also raising trillions of naira in bonds and bills, and they've also drawn their first tranche of the about the $5 billion UAE deal. So today we'll be having a deep dive with Andrew Esene. Andrew Esene is one of Nigeria's sharpest market voices. Andrew is joined us today to break down what's really happening with this market correction, whether foreign investors are stepping in or whether they're stepping back. We're also going to be looking at the new CBN rules for banks and exactly where smart money is positioning right now. So if you invest in Nigeria, you don't want to miss this. So let's get into it, but not before welcoming Andrew Esene. Andrew, welcome to the Edge.
Thank you, Dr. Okafo. Great to be here again.
Right, my pleasure. Okay, so after months of impressive gains, the NGX reached almost about 60 percent thereabout year to date at a point in time. But after months of that impressive gains, we're now seeing market correction. We're seeing yields rise as well. So the NGS experiences steepest single day loss of 2026 on June the 24th. The all share index down by about 2.35 and with about 3.64 trillion naira wiped off in one single trading session. So we saw that pressure also continue to Friday's close. So Andrew, how would you characterize this week's sell-off? Is it pure profit taking after the strong year-to-date run, or is it something else that we need to be worried about?
Okay, thank you, Doctor. I think it's a mix of both. The um, early sell-offs we saw we can attribute to profit taking in the market. We had seen the strong rallies that you mentioned, and the market was up over 60% on a year-to-date basis. But this profit taking was expected because of the
Yeah.
gains that have been recorded over time. But I believe that position um, has further worsened because of some other factors that have played into the market. So we see profit taking from the recent highs, but we also saw the impact of the new settlement cycle, the T+1 settlement cycle, which led to some foreign portfolio investors waiting to recalibrate their operations, because typically under the T+2 and T+3 regime, they could place trades and then settle in 1 or 2 days, but in 2 or 3 days. But with this new settlement cycle, they have to make the funds available almost immediately. Those trades are made. So we think there was some of them took some time to recalibrate, work with their custodians to ensure that there's a new system in place to ensure that their trades are properly funded. And then the Dangote private placement opened from I think June 1 to June 10th. It had a 10-day trading window. And so we saw some sell-offs in the equities market, especially amongst highly liquid stocks, to pre-fund their positions for that private placement. So this is a part of the reason we've seen the correction deeper than expected, and then yields in the fixed income space have also been quite attractive. So on the surface level, investors would want to take profits they have gathered in the equities market and then warehouse them in the fixed income market until we see the equities market bottom out. So it's partly profit taking, and then we're also seeing some other factors come into play.
So you highlighted about three factors there: profit taking, the switch to T+1 trading settlement, right?
Yeah,
So I think
the refunding for the Dangote private refinery private
yes. I
placement.
mean, those are some maybe factors that probably a lot of people are not paying attention to.
Mm,
So we're seeing a lot of people trying to pre-fund, have funds available, and when you want to sell, you're most likely going to be selling the stocks that are liquid.
yeah,
You're
yeah.
most likely going to be selling the stocks that are liquid, the stocks that you've made money from, and
Hmm.
that's so that these are some of the other factors that probably we are not paying attention to.
Yeah.
So that's some rotation out of existing names to the Dangote
A new
IPO when it's
opportunity.
then yeah. You said it was
What's in play now is the
mhm,
private placement. So we also
okay.
expect the same thing to play out during the IPO launch around September, October. So we
Yeah, you're
may see
right.
the same
It's a
route in the equities
private
market.
placement that is in play now.
Yeah.
Okay. So you are you saying we expect this similar trend when the IPO is in full force?
Yes, we expect to see the same, just like the listing of the SpaceX IPO in the New York Stock Exchange. We did see some sell-off among stocks in the same sector, investors wanting to reposition in SpaceX instead. So we expect to see that in the equities market as well, not just the oil and gas sector, but you know across the market, investors just trying to make funds available to invest in the IPO.
Okay. But the with the amounts that has been wiped off, so I'm beginning to think, or I wanted to get this from you. The with the amount wiped off, how does this correction compare historically? And was it telling us about the current investor sentiment?
Okay, well, it's not a one-off. We've seen
Have we seen
losses in the
something?
market.
Yeah.
Yes, we've seen worse single-day losses in the market, even on a weekly basis. The loss on a week to date was about 1.65%, which is really
Mhm.
not a historical.
Yes.
Um, uh, it's not of historical magnitude in terms of what we've seen in previous times. To investors, they are a bit more cautious. And then one other thing that also drove the losses that we've seen is that apart from profit taking, we are seeing people also try to cut their losses because the 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 correction that we are seeing is as if it's getting deeper by the day, right? Just when you
Mm.
think that there is some bottom, it falls off again, and you see a key name losing about 10%, which drags the general index further. So while some are trying to take profit on their positions, you also have some investors that want to cut the losses that they have made and just maybe hope for a re-entry at a lower price. So the current position is we're seeing a lot of cautious trading in among investors.
So let's look at the banking sector now. So we've seen the losses that we've just talked about, and the banking stocks have also lagged during this pullback. Oil and gas and some industrials have shown some relative resilience. So, what's driving the sector divergence that we see, that we are currently seeing?
So the banking sector is the most liquid sector in the market. So the
Okay.
whole sell down we're talking about would um, impact the banking sector to a greater degree that it impacts the others. Um, and then this is also the period where we saw the draft rules regarding the regulation of financial holdcos. That has
Mm-hmm.
also created some uncertainty because there is need for some clarity in those rules, which we expect to come out by July 9th, according to the publication. So all that
Yes.
uncertainty, whether or not the financial holdcos will need to raise additional capital, and to what degree is still uncertain. So that caused a rout in the banking sector. So that's why we've seen greater volatility in that space compared to what you've seen in industrials and the oil and gas space.
All right, I think we're gonna have to wait for that report or to come out as a July 9, because a lot of people are already thinking banks gonna come back for some form
Yeah,
of capital raising,
yeah.
and high markets going to take that. So we really have to watch out for that. Okay. The cement giants, we're talking about the likes of Dangote, have been like market movers all year. They are sharp moves this week. I've raised some questions about profit taking in some of the over owned industrials versus some of the wider reallocations that we are seeing along some of these high valued stocks. So with heavyweights like Dangote Cement, Boa Cement, they triggered circuit breakers this week. They triggered the circuit breaker. Is this sector specific selling or a broader rotation out of equities?
It's a broader rotation. A few of these names, especially Boa Cement that was mentioned, has
Mm-hmm.
been trading on largely on offer, but because of the volume required to drop the price, that was not achieved, and that is why we've not seen the
The
price
price
drop.
change.
Yeah, price change until the particular days that you reference. So it's a broad-based sale across the sectors. We see Aradel also dropped, I think 10% within the week. MTN also dropped. Then it's really the bargain hunting, one would say, is really in the banking space, because again, it's the most liquid, and those are the ones we expect to pay interim dividends. The likes of Dangote Cement and Boasem do not pay
Yeah.
interim dividends. So even in the near term, the names that one would want to position in just for interim benefits are still the banking names. So it's a broad-based sell-off, but then those that are attracting investor interest, even in this correction period, are still the banks that will pay interim dividends.
Okay. I mean, it's a lot. It's getting a lot of people on the edge, like trying to understand whether we're going to see some respite, and so we're seeing that massive sell-off in the cement sector, and we've seen that as well in some banking names. But let's talk about this banking regulation that we're talking about earlier. But first, I want to get your take about the foreign investors' participation. Have foreign investors been relatively active or quiet in the Nigerian equities market, or have you seen them kind of pull back? You know,
Okay,
in the
we've
in the
seen an
recent
improvement in their
weeks.
participation in the equities market compared to we'll say a similar period of last year. And that's largely on the back of the improved stability we have in FX and on our reserve levels. So that has given a lot more confidence to foreign portfolio investors in terms of FX stability. However, as I mentioned, the reviewed settlement cycle, the T1 transaction plus 1 day settlement cycle, has seen them also wait in these sidelines, just to be able to finalize their operations as it relates to their settlement. So we have seen improved participation of FPIs in the market, but the local investors still dominate um, trading on the NGX for now. That's domestic institutional investors.
Okay, so the uh, domestic investors still dominating activities right now, because I mean
Yes.
But from what I observe, what I see, I think foreign investors flow have been a key swing factor if you look at it in the past rallies. But the recent data shows domestic investors are dominating the turnover, which is quite in alignment with your position there. So the CBN's proposed new ring fencing guidelines for banks and their affiliates. I think we mentioned that's coming July 9. What are the key implications for banking groups and their conglomerates? Even though we're yet to see the full draft, what are the key implications that you can perceive or that when you talk to your contacts that you hear?
The I think generally the market welcomes the policy. It's largely to strengthen corporate governance and then also prevent a contagion risk within
Mm-hmm.
the banking groups, right? So it's generally welcomed. I just think there is some uncertainty that requires clarification. One of the new policies is that the holdco company will hold the capitalization of the holdco company will be 20% above that of the total capitalization of a subsidiary. So whether that means that the holdco companies will hold 120% of the subsidiary capitalization, or they would just hold 20% above what the subsidiary capitalization is unclear. And so there is need for some direction on that. There was also the position about shared services. So
Yeah.
activities like functions like risk management will stay within the bank and not be outsourced, so to say, to the holdco company, while others like IT and the rest can be outsourced. Then a limit to a limit to shared services, the 20% buffer, and ring fencing international banks. So the impact of the ownership of international banks will not sit with local banks. It will either sit with the holdco company or an intermediary company. That is to ensure that um, risks in other clients, in other jurisdictions, do not
Mm-hmm.
drag down the Nigerian arm of that bank, whether foreign currency risk or regulatory risk in other clients do not affect the Nigerian bank. So it's trying to ring fence, like you said, the Nigerian banking operation from other banking climates or from the holdco itself. So generally, it's been welcomed. There just needs to be some clarity as to the implementation of it.
So the proposal aims to like limit contagion risks by
Yeah,
enforcing some stricter separation of
yeah,
maybe operations, um, the data as you mentioned, some of the operations which whether it's the parent, the hold co that manages IT, or it's the bank that manages IT or the risk. I think they're also looking at maybe how it's the relationship maybe within if a bank has some fintechs within its structure, um,
mm,
then there's need for that separation on how that is also managed as well. But we,
yes,
as you
yes.
said, we will be taking a deep dive on that once we have more information on the 9th of July. Okay, so Andrew, let's talk about inflation and the recent surge in government borrowing. So the headline inflation is currently around 15.93. That's the headline inflation. And S&P came out to say they upgraded the 2026 average forecast, inflation forecast, to about 16.9 due to energy costs,
Yeah.
due to the pass-through cost of energy. How worried should equity investors be about this sticky or higher inflation that has refused to go?
Higher inflation is a cause for worry. It impacts corporate margins, reduces corporate margins, um, production costs. It
Yeah.
also impacts consumer wallets and consumer spending. So, in terms of the impact on companies, it's usually negative. But for the broader equities market, except there is a corresponding increase in fixed income rates, right? It reduces the real return on fixed income investments. And so that makes the equities market comparably maybe more attractive if we do not see a corresponding increase in auction of fixed income rates. But then again, in the equities market, you do have some sectors and companies that can and that has strong pricing power and they can transfer that cost to the consumers, maybe those in the cement space, as we've seen, oil and gas, and then selected FMCG companies that can transfer that cost. They will actually not suffer as much. So if investors are considering investing in the equities market in the light of reduced real return from fixed income investments, those are the kind of names that they will be looking at. So it's generally negative, but to some extent, it can also cause investors to look into the equities market.
Yeah, I mean, in the fixed income market, we've seen an average uptick in yields by about 100 basis points. And that's when you talked about some of those factors are responsible for the sharp drop in stock prices. I would say that's also one of the reasons yields are becoming more attractive in the fixed income market. So I imagine investors are or who are pulling their funds away from the equities market might be also looking into the fixed income market because of the attractive proposition that that offers at the moment. But
Mhm.
uh, it's something that we continue to watch. Then I also talked about this FGN government borrowing. So government has stepped up borrowing. The last auction on the federal government bonds. They borrowed about 1.2 or about 1.3 trillion naira from the NGM bond auction. So we saw strong oversubscription, but it had increased yields by about 100 basis points in that market. So how is this heavy domestic borrowing interacting with the CBN liquidity mopping that we're seeing almost every day in the treasury bills market? Is Because my concern is the borrowing pattern. Is it in line with the overall borrowing expectation that we have in the 2026 budget?
Okay, the 1.2 trillion naira um, bond, the federal government bond auction, that was expected. It's in the calendar of borrowing for the year, so that was expected. The rate of oversubscription was, however, what analysts started looking at. It means that there is the liquidity and then the appetite for attractive returns, despite the fact that the CBN is mopping up with T-bill auctions and other in money market, monetary
The OMO
policy
auction,
instruments.
yeah.
Yeah,
Mhm.
so that was it just tells us that there is that liquidity in the system, and then investors are looking for those attractive risk adjusted returns. But what it also does is that, like you mentioned, rates are still very high. To keep rates elevated is if the government wants to continue to borrow, and then it crowds out the private sector in that the competition for those funds. So on one hand, the government is borrowing more, and the CBN is mopping up liquidity in the market. That leaves the private sector, with the short end of the stick. So the impact it has on the private sector is a bit concerning. With the government borrowing such large amounts at such rates, so that it shows that there's liquidity in the system. People are looking to invest, but where it leaves the private sector is a concern.
Also, the Nigeria UAE deal, we understand during the week that Nigeria due the first tranche of the $1.5 billion of that $5 billion total return swap with the first Abu Dhabi bank. So what does this mean? And what does this structured financing mean for the foreign exchange reserve, debt servicing that's been going up, debt servicing cost, and the general macro stability? What does this mean?
Okay, well, for one, it improves our
Foreign
FX
reserves?
stability.
Hmm.
Yeah, it improves our FX stability and also strengthens our foreign reserve levels. We also see that the government is diversifying its financing means, away from the issuance of euro bonds. But these structured instruments typically they're more complex, and they also come at a higher cost than just a straight um, bond issue. So that's just the concern as to the impact it will have on our debt servicing costs. So it's good to improve FX stability. It's good that it's coming in and it will improve our foreign reserve levels. But as compared to Eurobond issues, it might be coming at a higher cost, and there is concern around our debt service levels already. Using such an instrument to attract funding um, is diversification, like I said. But then again, the cost is what we want to pay more
Look
attention
at.
to.
So
Yeah,
from what I get, it's structured as a collateral backed swap, rather than the traditional debt. And this first tranche will provide us with dollars without the immediate Eurobond style issuance pressure. Okay. But it comes with a floating rate and collateral obligations that warrant careful monitoring. That's
yeah,
why a lot of
yeah,
people are, quite at unease about it.
yeah.
Okay. But I don't know, Andrew, have you been hearing people say, but the government officials are telling us that they're doing well in terms of revenue generation, but people are wondering why we still borrowing heavily.
Local revenue generation in local currency we've seen reports from the customs, from the Nigerian Revenue Service, that has
Mhm.
improved. This is foreign currency borrowing. So it's
But we still need them in naira, isn't it? They still be
yes,
going to be
but
converted to naira somehow.
yes, but if it's the impact it will have on the foreign reserve levels, and then in servicing our external
Yes.
borrowing
Hmm.
engagements, that you need the foreign currency for that.
Yeah.
So,
Okay. Makes sense. So government is on the one hand saying the revenue profile has improved significantly, but the borrowing is within the 2026 borrowing plan. So they're just going ahead to implement the budget as signed to law.
mm,
Okay. So the CBN has been very aggressive mopping liquidity. I think we've talked about that. So they're mopping liquidity, what trillions now, rates are high, about 19 or 20% in the open market operation. So that's also continuing to take away liquidity as we've talked about. And
mm,
I imagine that that would also continue to build that pressure on the borrowing cost, or the debt servicing cost that we talked about. So, but let's talk about this half year season that is approaching. Uh, what would what will you be watching most closely in the banking results and the other key sectors as the half year season approaches?
Okay, it would be, especially for the banks, it would be the net interest margins
Yeah.
to see how the deployment of capital, the impact that will have in their books, the asset quality. We expect that to have strengthened given the recapitalization. For other sectors, it will also be the retention capacity. And then generally for them, mostly again for the banks, the expectation of interim dividend payments. There was some kind of disappointment with the full year dividends for a few of the banks. Um,
Yeah.
yeah, because of capital adequacy levels and regulatory issues, a few of them could not pay. So we're watching for half year to see if that position will change or if it will remain the same, that they will not be able to meet their interim dividend obligation. So those are key areas that we are watching to see.
Do you have any updates from the Access Bank situation?
As to whether a dividend will be declared.
Yeah, I think there are two issues whether a dividend is going to be declared or, they also have this holdco issue with their foreign subsidiaries rather, that they were asked to bring those within about 10%.
Yes.
Yeah, do you have any updates on
Okay, no,
that?
no,
I know they
no
have about
updates.
12 months. They have
Yeah,
about
yeah.
12 months to meet that, but
To yeah, but
so
we
I
know that there will
imagine
be
that.
no dividend
Okay,
was declared. Yeah.
okay. All right. So, but how's the correction impacted like retail investor sentiment? Are we seeing early signs of bargain hunting from what you're seeing, or you think
Um,
they pull back?
Retail investors are still very cautious at this time, and we are seeing a lot of, especially for those who just got into the market because of the recent rallies that had been, the recent rally that had been reported in the market. So um, a lot of them came into the market on the buzz that the market had returned double-digit returns in as at going into half year 2026. So a lot of them are a bit wary of what is going on, and you have to engage them to calm nerves so that they don't just realize the losses that their books currently hold. So there's a lot of caution on that part. But um, in terms of bargain hunting, we have seen some bottoming out with the likes of GT Co,
Hmm.
Zenith Bank, First Hold Co. Those particular names have not recorded significant losses as much as the other names and other key names in other sectors have recorded. So while there's a lot of caution, we are seeing some bargain hunting in selected names as well.
Okay. I think the equities market, as I mentioned in one of my recent videos, is probably the only market where sales are going on, but the customers don't want to buy.
Mhm. Yeah, those sales at discounted prices is already some people is already in some portfolios is already losses for them. So whether they should average down now or wait to see how low it goes is the issue, and whether there are even funds to average down. So for experienced investors like yourself and many others, it's bargain opportunity. Warren Buffett famously said that the best time to buy into a company when it goes through a short-term problem, when it has short-term issues. A good company that has short-term issues, that's the opportunity to get in. So this correction actually presents some opportunity for investors to position and even average down their positions in key names, fundamentally sound names.
Yeah, and I agree. The fundamentals are still there. They're sound. Most of these banks are sound. They now recapitalize over 500 billion. So they have the capital to sweat. And valuations are even now cheaper, right?
Yeah.
Valuations are cheaper. So that's why I'm saying it presents opportunities, but a lot of people like it when the market is on the upswing. Like
Yeah,
market
on the
is,
upside.
you buy today and then it's gaining 5% tomorrow. That's what a lot of people want to do. But well, people who build wealth through the equities market do that when other people are running away from the market.
True, true.
Okay. So looking into the second half, what's your base case outlook for the NGS? Any standard teams, sectors, or risk investors should be focusing on?
Um, so typically, going into the second half of the year, there are several things that come into play.
Okay.
One of the first would be expectation of half-year results and interim benefits.
Mm-hmm.
So I expect that the current sell-off will ease out as we
Yeah.
begin to expect those earnings to come into the market. So for investors who are already positioned in key names, they would want to stay there to get some comfort, some returns from the interim benefits, and so that should stabilize the market. And then um, going into August, September, typically towards the end of August, we see a lot of bargain hunting, investors trying to position from the drawdown that we have seen
Okay.
in the market, and then the regulation with regards to the financial hold codes, when that clarity comes into the market, that would also be one thing that would color the market performance going forward. So whether the financial hold codes will be required to raise additional capital, that also comes into play. So typically, towards the end of August, September, we see a lot of bargain hunting. And remember the reinclusion of the NGX
Into the
into the
FTSE
FTSE Russell Index
index.
would happen
Yeah.
in September. So that should see some consolidation, and even rally in selected names. But with the Dangote IPO coming around that period as well, we may also see some sell pressure to also make liquidity available for that event. And then after that, the other theme would be positioning for the Santa Claus rally, which will take us into Q1 of next year. So these are dominant themes that would color the market going into the second half. But generally, I believe that I'm of the view, sorry, that the market will still close with double digits upside, and largely on the back of the fact that after the listing of Dangote Petroleum Refinery, we should see some rally in that particular ticker, and given its weight in the market, it would pull the general index higher. So where we will see selected names losing some points in the market, the general index would generally be uh, the benchmark index would actually be recording some gains. So I still expect the market to still close with double-digit gains this year.
You didn't talk about the impact elections could have on the market.
Well, given that, um, except there is heightened uncertainty and insecurity,
Mm-hmm.
I think local investors have come to terms with election investing during election seasons, right? It's like I said, it's a temporal event, you know, that to a large extent, as long as the elections are peaceful,
Yeah.
the from the local investor point of view, things will continue as normal, right? The winners will win, the losers will go to court, and everything just returns to status quo after some time. It's foreign portfolio investors and maybe some that will be concerned about a possible change in policy, change in government, and the rest. But I think for local investors, it's really just an event that will happen, and then everything continues as usual. So it may cause some sideline waiting, just to watch and see what would happen. But
Mm-hmm.
for mainly for local investors, it's just an event that would happen, and then life continues.
Okay, Andrew, let's begin to custom. In uncertain times like these, the one we currently have now, a single discipline piece of advice, whether around diversification, cash management, focusing on quality names, can be incredibly valuable for our listeners currently navigating the market. So, as we round up, what advice do you have for retail investors currently as they navigate this market?
Well, investing in fundamental names is a time-tested cliche,
Mm-hmm.
in the market. And most times when retail investors come into the market, they just want to join the bandwagon and jump into anything that is moving. But what will endure over time, what is sustainable, is investing in fundamental names. As they say, know what you own and why you own it. So
Yeah.
that in times like this, you see, just like what we are seeing in key names that we've mentioned, the likes of GTCO and Zenith Bank, they are not
Mm-hmm.
dropping as much as the broader market
Broader, yeah.
because the fundamentals are sound and
And there are
investors
investors
want to
waiting.
hold them.
There are
Exactly,
investors
they're
waiting
waiting to
for
mock up
to mop
those
up.
those,
Yeah.
those positions. So if you have fundamental names and even where there's a correction in the market, it gives you an opportunity to actually buy more and understand that it is in times like this that wealth is transferred. Those that panic sell off at discounted prices to those who are patient investors. And over time, those patient fundamental investors tend to have they are left in a better position than those who panic and sell off their position. So buy fundamental names, know what you own and why you own them, and then invest for the long term. In the long term, you'll still be better off.
All right. Thank you so much, Andrew. Always an insightful commentary that you bring whenever we have these conversations. Thank you for your brilliant analysis today.
Thank you very much, Doctor.
All
Thank you.
right. Thank you, everyone, for joining. It's been a pleasure bringing this to you this weekend. Again, we are here every weekend helping you to to better understand the investment world and helping you to make good investment decisions. If you're new to this channel, please hit the subscribe button and click on the notification bell so that you can always be notified whenever we have new episode. And please, everyone, like this video on your way out and share with your communities. And if you have any questions, either for me or for my guests, please put them in the comment section. I'll be there to engage with you. Thank you, and we